Now on to a big spotlight for the day, and that has to be the oil prices. The Fed rate hike has only added more pressure to the already weak prices as the supply glut continues unabated. Here's where we stand. Brent is set to post losses for the third straight year, the first time this has happened since 1980s. NYMEX is set to post losses for the second straight year. That's the first time it has happened since 1998. Many influential brokerages are raising the red flag. CLSA and Goldman Sachs expect NYMEX to hit $20 per barrel. Moody's is a little more upbeat and expects NYMEX to return to $40. For more on that now, I'm joined by John Kingston, the veteran energy reporter and now president of the McGraw-Hill Financial Global Institute and director of the Global Market Insights at McGraw-Hill Financial. Hi, John. Thanks so very much for joining us. Every time we talk about the declining oil prices, the overwhelming discourse has been on the supply glut. But are there other factors also that is contributing to this downward pressure, which perhaps we are not focusing or talking as much about?
Well, I think supply is the overwhelming reason. Demand certainly has picked up, not surprising. Demand elasticity for oil over the past several years, well, no, I shouldn't say the past several years, does have a history of existing. You know, there's always been that view that people will consume the same amount of oil no matter what. That's not the case. So the demand has been very strong. And yes, no doubt about it, the strong dollar puts downward pressure on commodity prices. Low interest rates allow you to build inventory, cheap money. I think the biggest impact of cheap money has been really over the last 4 or 5 years. It's provided a huge amount of capital to the U.S. upstream drilling sector, and as a result of that, that's why you have the supply bulge. I do want to correct you on one thing because it's kind of one of my pet peeves. In a commodity markets, you don't have losses because for every dollar made, there's a dollar lost, and so therefore I never talk about oil markets having losses. They have declines or increases, and certainly for India, this has been a great boon. And India is a significant oil exporter, so this has been a great thing for the economy. I don't think Indian policymakers would view these as losses. They would view these as gifts from heaven.
Yeah, absolutely. In fact, In fact, it's brought quite a smile on our finance minister's face. But then, we will talk about its implication on the global growth in just a bit with you, John. But tell me more about this. You're saying that, of course, lower oil prices because of oversupply and also overall aggregate demand is also low. That's sort of, putting downward pressure. But how do you see, in some months, even Iran will sort of resume production after sort of getting out of the sanction that was imposed by the United States. So are we in the near to medium term staring at very low oil prices?
I think so. Of course, Iran does. Iran certainly is the big wild card. Even if they don't increase their production at all, they do have tens of millions of barrels of floating storage of oil that they can move to the market very, very rapidly. I mean, it's already in tankers. So we expect that they will do that. And they're talking about some very aggressive numbers of ramping up production. All I can say that is we'll see. I'm not going to say that that's wrong. I don't know. But the history of countries that have had to lock in or had to shut in, a lot of production for whatever reason, in many cases politically driven, whether it's Venezuela back in the early 2000s as a result of their strike, the Iranians as a result of the sanctions and the EU ban on imports. They tend never to come back at quite the same level that they were before the shutdown, and not for years, right. And after a lot of investment. So the Iranians say that's not going to be the case with them, but we'll see if they can meet their targets. But for nothing else in the short term, right. They do have 40 to 50 million barrels of oil in, maybe not 50, but 40 million barrels of oil in storage and floating storage. Right. That can move to the market very quickly.
Right, with very little consensus right now between the OPEC members. Also, the other factors that you laid out, which I sort of mentioned, sort of referred to in my previous question. All of that would suggest there is a lot of downward pressure. But do you see any reversal? And if that reversal happens, what could be some of those factors to sort of trigger a turnaround in the oil prices?
Well, I'd say right now the chance for reversal will be in the second half of 2016 because by that time the expectation is that there'll be a greater cut in the output from the U.S. U.S. output is probably down 300,000 to 400,000 barrels a day from its peak. A lot of companies have managed to survive this year and continue to produce at some fairly hefty levels, very healthy levels, and a lot of that is because they had a great amount of oil hedged. those hedges will roll off in 2015 to either a non-hedged situation or a hedge at a lower number. So it's not likely that they can continue to produce. You know, people say, well, they're producing at $40 a barrel. Well, they're really not. I mean, if they hedge that oil at 60, effectively that's their cost. So, or that's their price that they get. So, you know, those hedges are gone. A lot of them are gone by the start of 2016. You're going to have capital squeezes. Borrowing bases are going to be more limited. So when you look at the second half of 2016 with the expected drop in U.S. and other non-OPEC output, plus the expectation of, you know, increased demand, you know, you're looking at a market that looks a lot more balanced then. But again, with the Iranians being the wild card.
Right. My final question then to you, John, is that you know, something that you were referring to in terms of the benefits India as an economy gets when oil prices are low. But tell us more from a macro perspective. What will be its impact on global growth? IMF came out with a paper recently saying that largely it's positive, but the positives have not been realized so far. So how do you see it? Lower oil prices, and what sort of a correlation with the overall global growth?
Well, I think that's true. That the growth. The growth in the global economy that's been oil-fueled has really kind of disappointed people, and there may be some good news in that. The good news being that as countries have become more energy efficient, they don't get quite the boost that they got before, simply because energy consumption as a percentage of GDP, or the cost of energy consumption as a percent of GDP, isn't maybe what it would have been 10, 20 years ago, and that's a good thing. But I do think that on a macroeconomic level, it has been therefore somewhat disappointing to people who were expecting a bigger boost. You know, I know in the U.S., the J.P. Morgan Chase Institute did a study about, you know, where have all the oil savings gone, and one of the things they found was that Americans are not just that they're driving more, but they're buying a premium gasoline where they used to buy regular, because now it's cheaper. Well, you know, quite frankly, this is crazy, because their car isn't going to operate much more efficiently, and so you're kind of giving away these savings. So, you know, when you read something like that, it gets very frustrating. But certainly, I think it's helped growth, but you're right, not to the level that we thought it was, and there may be a silver lining to that.